Welcome to another deep dive. We've got a ton to unpack today, from business and finance to even a little geopolitics. We're trying to piece together all these different puzzle pieces and really get a sense of what's shaping the world in 2025.
It really is like a puzzle, isn't it? And each piece kind of reveals a different angle of this massive global landscape.
All right, so let's start putting those pieces together, shall we? And I think a good place to begin is with tech. We've got sources pointing to its dominance, but also some hints of possible disruption. What do you think?
Well, one thing that jumps out is just how much passive investing is happening in tech, especially in those like Magnificent Seven stocks, Apple, Microsoft, Amazon, you know the names. I mean, over half of all equity funds are passive these days, and a huge chunk of that is going straight into those big tech companies.
So basically just tons of money flooding into those companies almost on autopilot. But is that a good thing? Because our sources seem to have some mixed opinions about that.
Yeah, I mean, it definitely raises questions like what happens if investor sentiment changes or some of those companies, stumble? All that concentrated capital could make the market vulnerable.
And it looks like some of those Magnificent Seven are starting to show some cracks already.
Hmm.
Our sources show some weakness early in 2025. But then there's Meta. They seem to be doing pretty well, up 22% this year. What's driving their success?
Meta's interesting because they really show how powerful it can be to adapt. Remember, they took a hit when privacy changed and the ad market shifted a while back. But they seem to be bouncing back, especially with all their investment in the metaverse. Their Horizon Worlds platform is seeing more users and creators are making more money there.
So they're basically going all in on the metaverse as the next big thing for social interaction. That's pretty bold.
Yeah, it's bold, and who knows if it'll completely pay off, but at least it shows they're not afraid to take risks and change their business model.
And speaking of risk and investing in new things, we've got to talk about AI. I mean, it's everywhere these days. Tech earnings reports are showing just how much these companies are pouring into AI development. Like Amazon's boosting their capital expenditure to $100 billion this year. $100 billion, mostly for AI.
That kind of spending really sends a message. It's like they're saying AI isn't just some side project anymore. It's the heart of their strategy going forward. And that has huge implications, not just for tech, but for everything.
And it's not just Amazon. It feels like all the major players are in this AI arms race right now. But there's one company that seems poised to benefit more than anyone: NVIDIA. They're the ones making the hardware that powers all this AI.
That's right. And even though there were some worries about open source AI models, analysts are actually predicting that NVIDIA could double their revenue this year. That's a pretty big bet on the future of AI.
Really. So we've got this massive tech dominance, potential disruptions on the horizon, and AI shaking things up left and right. And speaking of bets on the future, let's talk about China. Our sources paint a picture of some serious uncertainty there with some pretty conflicting perspectives.
Yeah, it's a mixed bag for sure. On the one hand, we had that recent rally in Chinese tech stocks, Alibaba, Xiaomi. They surged over 4% after Xi Jinping made some positive comments about the tech sector.
But on the other hand, we're seeing this huge drop in foreign direct investment in China. It's down a staggering 99% in 2024. And we've got people like Carson Block, the CEO of Muddy Waters, saying China's just uninvestable because of all the risk.
Yeah, that drop in foreign investment really tells you something about how worried global investors are. So we've got these two things happening at the same time. Chinese tech stocks showing signs of life, but foreign investors pulling back like crazy. Makes you wonder, is China a high-risk, high-reward situation, or are the risks just too much to handle?
It's a tough call, no doubt. And even big companies are struggling with that question. Like NVIDIA. They see a massive opportunity in the Chinese market, but also acknowledge all those uncertainties.
It'll be interesting to see how it all unfolds. There's a lot at stake, and the outcome could really reshape the global economy.
Absolutely. Now let's move to something a bit less volatile, maybe. Let's talk energy. Our sources suggest that those big global oil and gas giants, companies like Occidental and Diamondback, they're really laser focused on shareholder returns right now.
You're right, they're boasting free cash flow yields of over 10%, which is pretty tempting for investors these days. Just to clarify, free cash flow yield basically tells you how much cash a company's generating compared to its stock price. Higher yield usually means a healthier, more profitable company.
So they're making bank and rewarding their shareholders, but are you just sitting back and enjoying the ride? Seems like they're still pushing ahead with expansion plans too.
Yeah, they're not slowing down. For example, Diamondback is continuing its development in the Permian Basin. That's one of the biggest oil-producing regions in the world.
Interesting. Especially with all the talk about moving towards cleaner energy.
Well, transitions like that take time. And while renewable energy is definitely growing fast, the world still needs a lot of oil and gas. Plus, the U.S. wants to produce more energy domestically, helps fight inflation, and makes us less reliant on other countries for energy.
So oil and gas are still major players. But our sources also point to some interesting developments in precious metals. Goldman Sachs is predicting Gold will hit $3,100 an ounce by the end of the year. That's a pretty big jump.
It is, and they're saying the main reason is that central banks, especially in China, are buying a lot more gold. They seem to be diversifying their reserves and hedging against global uncertainty by stocking up on gold.
It's like they're preparing for some kind of storm in the global financial system. Okay, now let's bring things a little closer to home. Let's talk about housing. It sounds like it's been a bit of a roller coaster ride lately for both buyers and sellers.
It has been. Those high interest rates, almost 7%, are making mortgages really expensive. And in places like Florida, rising insurance costs are making things even tougher.
Yeah, it sounds like it's a pretty challenging time to buy a house. And our sources back that up. The National Association of Home Builders Index just hit a 5-month low, which basically means those in the industry are feeling pretty pessimistic.
They're facing challenges from every direction: high rates, problems with the supply chain, even worries about climate change and how that'll affect property values, especially near the coast.
So a lot of challenges, but maybe some opportunities mixed in there too. What about overall consumer sentiment? Are people feeling optimistic or pessimistic about the economy?
It's a mixed bag there, too. Our sources say that small business owners are increasingly worried about inflation eating into their profits. But then you've got the Bank of America Fund Manager survey, and they're showing record low hash levels. That means investors are still pretty bullish and putting their money to work.
It's so interesting how you can have these totally different trends happening at the same time. Some people are hunkering down while others are charging full speed ahead.
It just shows how different everyone's views are and how differently people handle risk. What worries one person might look like a great opportunity to someone else.
Speaking of opportunities, one of our sources this week had some interesting career advice from investor John Dower. He was talking about how important financial literacy and education are in this age of rapid tech advancement, especially with AI becoming such a big deal.
His point was that we need to adapt to the job market as it changes, just like people had to adapt when we switched from horses to cars.
That's a good analogy. The people who embraced new skills and technologies, they were the ones who did well. Those who clung to the old ways got left behind. But how do people AI-proof their careers? That sounds kind of scary.
Well, it starts with knowing your strengths and weaknesses. What are you good at that AI would struggle to replicate? Things like creativity, critical thinking, problem solving, emotional intelligence. Those are your assets.
So it's not about competing with AI. It's about focusing on those uniquely human skills and using them in a way that works with technology, not against it.
Exactly. The future of work is all about humans and machines working together. We need to find ways to make that partnership work to our advantage.
This has been a fascinating conversation. We've covered so much already. Tech dominance, potential disruptions, AI changing everything, uncertainty around China, the energy sector, the housing market roller coaster, and even some career advice thrown in.
Yeah, and it's really striking how connected all these seemingly separate stories are. AI, the changes in the energy sector, the shifting geopolitical landscape, they're all intertwined and influencing each other in all these complex ways.
It's like this giant web of interconnected forces shaping our world. But how do we make sense of it all? How do we navigate this complexity and make smart decisions about our lives, our careers, our investments?
That's exactly what we'll explore in the next part of our deep dive. We'll dig deeper into these trends, uncover those hidden connections, and hopefully find those golden nuggets of insight that can help us make sense of this rapidly changing world.
Sounds like a plan. I'm ready to keep digging. Stay tuned for part 2.
Welcome back to our deep dive. We just scratched the surface of some major trends and their ripple effects. Now let's go a little deeper, unearthing those hidden connections and see what gems we can find.
I'm all for digging deeper. One thing that struck me from our sources is how the conversations around AI are changing. Initially, there was a lot of fear about AI taking jobs, but now it seems like the focus is shifting more towards AI as a tool to boost productivity and efficiency.
Yeah, it's a classic example of technology coming in and disrupting industries while at the same time creating totally new opportunities. Take Palantir, for instance. They've been using AI for years, especially in defense and intelligence.
Oh yeah, they've been around for a while. Haven't they been working with the U.S. government since like right after 9/11?
Yeah, they were pioneers in using AI to analyze data and spot patterns that humans might miss, and now they're applying that expertise to a wider range of things like cybersecurity and even healthcare.
But even with all these advancements in AI, it seems like the need for human expertise isn't going away. Like John Doerr's point about financial literacy, it's not just about coding or engineering, right? It's about understanding the bigger picture and making those smart decisions.
Exactly. Durr's comparison to the shift from horse-drawn carriages to cars is spot on. The people who adapted and learned new skills were the ones who thrived in the new economy. And the same principle applies today.
All like we need to develop this new kind of literacy, and AI literacy, I guess, something that goes beyond just understanding the technology itself, but being able to really think critically about information, spot opportunities, and adapt to a constantly changing landscape.
And that's where education and critical thinking become so important. It's not just memorizing facts, it's learning how to learn, asking the right questions, and especially in this age of deep fakes and AI-generated content, figuring out what's true and what's not.
Which brings us to another area where critical thinking is absolutely essential. Geopolitics, especially when we're talking about China. We saw those contrasting views, some saying foreign investment is plummeting, others like NVIDIA seeing a huge opportunity.
The situation with China is a perfect example of how geopolitics can really impact investment decisions. You've got the trade war, the crackdown on tech companies, the human rights concerns. These are all factors that businesses and investors have to weigh very carefully.
And it's not just China itself, it's about the bigger global picture too, right? We're seeing a rise in nationalism, more protectionism, and this growing sense of uncertainty about the future of globalization.
Those trends are definitely creating challenges for companies that operate in multiple countries. They're having to deal with more complex regulations, disruptions in their supply chains, and these geopolitical risks that weren't as big of a deal a few years ago.
It feels like the world's becoming more fragmented, with different power centers emerging.
And that fragmentation creates both challenges and opportunities. The companies that can adapt to those differences, build more resilient supply chains, and tailor their products and services to local markets, those are the ones that'll succeed.
So adaptability and resilience seem to be the key themes here, whether we're talking about tech, careers, or the global markets. And speaking of resilience, let's go back to the energy sector. It's interesting how oil and gas companies are focusing on shareholder returns and expanding production, even while everyone's talking about transitioning to clean energy.
The energy sector is a great example of how these transitions take time. Even as renewable energy sources become more common, the demand for oil and gas will likely stay strong for a while.
Which explains why those high free cash flow yields from companies like Occidental and Diamondback are so appealing to investors. They're essentially betting that the demand for fossil fuels will continue, at least in the short term.
But it's not just about short-term gains. These energy companies are also investing in new technologies and looking for ways to reduce their environmental impact. They see the energy landscape changing, and they know they have to adapt to stay competitive.
It's like they're hedging their bets, trying to play both sides of the energy transition, which makes sense because no one really knows how fast things will change.
Exactly, and that uncertainty creates opportunities for investors who are willing to do their homework, understand the risks, and position themselves for both the short-term and long-term trends.
So we've talked about tech, China, energy, even touched on careers and financial literacy. What other common threads are you seeing in all of this?
One key theme that jumps out is diversification. We saw it with passive investing, where so much money is going into just a few big tech stocks.
Yeah, it's like putting all your eggs in one basket. If those tech giants have a bad quarter, the whole market could feel it.
And that's why it's so important for investors to diversify their portfolios, spreading their investments across different asset classes, different sectors, different parts of the world. It's all about managing risk and building a portfolio that can handle whatever the economy throws at it.
It's like that old saying, don't put all your eggs in one basket. But now we're taking it a step further and saying, don't even put all your baskets in the same room. You need some baskets in different rooms, maybe even different buildings, just in case something unexpected happens.
Exactly. It's about building a portfolio that can weather different storms, whether it's a tech correction, a geopolitical crisis, or a sudden shift in the energy market.
So diversification is key. But where does gold fit into all of this? We saw Goldman Sachs predicting a big jump in the gold price, driven by central banks buying more of it. Is that just a safe haven play when things are uncertain?
Gold has always been seen as a hedge against inflation and a safe place to put your money during tough times. But the fact that central banks are increasing their gold holdings suggests something bigger is going on.
It's almost like they're losing faith in the traditional financial system, or at least looking for ways to move away from the US dollar.
It's a sign of the times. The balance of power is shifting globally, with emerging markets playing a bigger role and challenging the established order.
Like the tectonic plates of geopolitics are shifting, creating tremors that we're feeling in the financial markets.
And those tremors will probably continue as we navigate this complex and rapidly changing world. Now let's focus on what all of this means for you, the listener.
That sounds like a great segue into the last part of our deep dive. I'm ready to connect the dots and see how these global trends translate into practical insights.
Stay tuned for part 3, where we'll explore those specific details and stories that can help you make sense of this world transformed.
Welcome back to the deep dive. We've explored these huge global trends that are really reshaping our world. But now let's kind of shift gears and focus on what it all means for you, the listener.
Yeah, it's easy to get lost in the big picture stuff, but the real value is figuring out how these global changes are going to impact your own life, your career, your investments, that kind of thing.
Absolutely. It's like we've been looking at this big map of the world, and now it's time to zoom in on like our own neighborhood and figure out what our next move should be.
Exactly. So let's start with something that I think is on a lot of people's minds these days, their careers. We talked about John Dower's advice on financial literacy and, adapting to this age of AI.
Yeah, that really resonated with me. But it can feel kind of overwhelming. What are some practical things people can do to like actually AI-proof their careers? It sounds a little intimidating.
Well, I think the first step is to really think about those transferable skills. What are you good at that machines can't do easily? Things like creativity, critical thinking, complex problem solving, emotional intelligence. Those are the areas where humans still have a big advantage.
So it's not about like being afraid of AI taking over. It's more about honing those skills that make us uniquely human.
Right. And once you've got those core skills figured out, it's all about continuous learning and upskilling. Take online courses, go to workshops, get certifications, anything you can do to keep expanding your knowledge and stay ahead of the curve.
It's almost like we all need to become lifelong learners now, always evolving and adapting if we want to stay relevant.
That's exactly right. The job market's changing so fast that you got to be open to new possibilities, different industries, things you maybe wouldn't have considered before. Don't be afraid to experiment and step outside your comfort zone.
That reminds me of those home builders we were talking about earlier. They're dealing with high interest rates, supply chain problems, and consumers who are changing what they want. It's a tough market out there.
It is, but even in challenging times, there are always opportunities for people who are willing to think outside the box and find creative solutions. Just like those home builders are adapting, we all need to find ways to navigate this ever-changing landscape.
And speaking of adapting and finding new ways to succeed, look at companies like Meta. They're changing their strategies even as the digital advertising world is in flux. They're still finding ways to keep users engaged and generate revenue.
Meta is a great example of resilience and innovation. They got hit hard by those privacy changes and all the competition, but they didn't just give up. They changed their approach, invested in new technologies, and now they're finding new avenues for growth.
It's like they're not just riding the wave of technology, they're learning how to surf it, adjusting their balance and approach as the waves change.
Exactly, and that same idea applies to investors too. With markets going up and down so much, how can someone build a portfolio that can handle those ups and downs?
That's the big question these days. It feels like everyone's trying to figure that out.
Well, we talked about diversification, spreading your investments out across different types of assets, different sectors, different regions of the world. It's all about managing risk and building a portfolio that can withstand different economic conditions.
So it's not just about picking winning stocks. It's about creating this balanced portfolio that can handle whatever comes its way. And that means looking beyond the U.S. market too, right?
Absolutely. We talked about how emerging markets, especially China, have both risks and opportunities. If you're comfortable with a little more risk, those markets could offer some really strong growth potential.
But you got to do your homework first. Understand the political and economic situation before jumping in. It's like being a global explorer. Charting new territories, but making sure you know the risks and rewards of each place before you go.
That's a great analogy. And as we're talking about exploring, don't forget the energy sector is going through its own massive transformation. We see companies like Occidental and Diamondback focusing on shareholder returns while also putting money into new technologies.
Yeah, that's a fascinating dynamic. We're witnessing this huge shift in how we power our world, and it's opening up all these opportunities for innovation and investment across the entire energy spectrum.
From solar and wind to battery storage and carbon capture, the clean energy sector is booming. And as governments around the world push for lower carbon emissions, those trends are only going to get stronger.
So we've covered a lot of ground in this deep dive: the rise of AI, the uncertainty around China, the changing energy landscape, the importance of financial literacy. It's a lot to take in. What's the final message you want to leave our listeners with?
I think if there's one big takeaway, it's this. Never stop learning. Never stop questioning, exploring, and expanding your knowledge.
That's so important. It's not about having all the answers right now. It's about having that mindset of always being willing to learn and adapt.
Exactly. The world's changing faster than ever, and the only way to keep up is to stay curious, be adaptable, and build that resilience.
Well said. That's all the time we have for today's deep dive. And until next time, keep exploring, keep learning, and keep diving deep.